College football returns in
You're about to embark on another exciting adventure on Lockin in with Deb and Perrin. I'm Deb, the real estate Sherpa with Coldwell Banker Bain in Puyallup, Washington. This program is a resource for information on all things relating to real estate. We'll be talking with industry leaders about a variety of topics, and it's important to keep in mind that every situation is unique, so please always seek the advice of a properly licensed professional before applying any of the information we share with you, and in no case should anything we say be interpreted as legal advice.
This is Perrin Walker with Fairway Independent Mortgage Corporation, NMLS number 2289. We are an equal housing lender. This is not an offer to enter into an agreement. Not all customers will qualify. Information, rates, and programs are subject to change without notice. All products are subject to credit and property approval. Loan officer NMLS number 173529.
Okay, welcome to the show. You're listening to Lockin' It In with Deb and Per. And today we have two guests in the studio. We have a home buyer and a homeowners insurance representative, and what is your title?
Insurance agent.
Insurance agent. Of course it is. I should know this. I am a licensed insurance agent. I deal with so many people, so many titles. I get blank sometimes. So first of all, we were doing a series, 6-part series, Perrin?
That's correct.
And this is a Perrin's feature. And last week, it was the 6 phases. And what were the 6 phases? Can you remind us, Perrin?
Yes, mortgage pre-approval, which is when the loan officer receives income documentation and pulls credit on the borrower and lets the buyer know how much they qualify for. Home shopping with the realtor, the full mortgage loan application, loan processing, which is all the documentation, underwriting with a full approval, complete approval, and loan closing, which is the final step.
Okay, and last week we talked about the loan pre-approval process.
Correct.
And so this week we have a buyer in the studio, and he has had his pre-approval and actually engaged already in the second step, which is looking for a home. So Perrin, this is Perrin Walker, and yes, he is our son, and he's a first-time home buyer, and he's going to share with us his experiences home shopping. Welcome, Perrin.
Thank you. I'm glad to be here.
All right. So, okay. So you have your your pre-approval in hand, and you're starting your journey for your special treasure. You're looking for the place where you'll spend an average of 7 to 8 years of your life. So you're really excited, and you've looked on Zillow, you've looked on Redfin, you've already picked out a few homes you want to look at. You're just ready to hit that home trail, aren't you? Yeah. But before we get started, the state of Washington and the brokerage require me to get a few things out of the way. So we got a ton of, disclosures?
There were several. You had one about wire fraud I saw several times.
Oh, that one.
I've done that one. I've rented too.
You're going to see that. So every time you make an offer, every time you're going to sign the closing or anything, you will always see this warning about wire fraud. Take it very seriously. In fact, I would say never wire money without first calling the escrow agent that you've been assigned personally and verifying the wire information in person directly. That is really the only way to prevent wire fraud, in my opinion. You just have to be careful. But
they made it quite clear. It really helps to prevent wire fraud because they made it so clear so many times.
Yes. Yeah, and that's why I actually spent so much time here now talking about it again. And some of the other disclosures you'll receive are things like information about the side sewers in the street, the carbon monoxide filters, detectors, I guess, and lead-based paint if you're purchasing a property that's built before 1978. And, oh yeah, there was one more thing that I share with you, and that is how our buyer and agent relationship works. And once we've done that, we get all that out of the way, then we set up a query, customize a query so you can search for your homes. What were some of the things, Perrin, we put in there? Do you remember?
Well, at first, my selections changed quite a bit.
Yeah.
I wasn't sure what to look for. We changed a few things here and there about the space that I need.
So, yeah, and first we start with the pre-approved amount. So if you're pre-approved for, let's say, $350,000, or no, well, yeah. So then you go and you put that in your query, and you're looking for homes within that price range. Also considering the HOA dues on the individual properties that will reduce the amount of your home price.
Or condo fees or whatever.
Yes.
It's a certain debt ratio that you're really approved to, like 45%, 50% of your income, monthly income.
Right.
So that's basically how it
Just
works.
basically, the pre-approval amount you get is the amount you can afford to pay a monthly payment on. And that payment includes mortgage interest, it includes homeowners insurance, HOA dues, mortgage insurance in most cases, as well as your mortgage itself. So the home you buy will depend upon a lot of different things. And also your financing type.
FHA,
Yeah.
VA,
And this is a big one. So, Perrin, you're a first time home buyer. You're a young guy, and you were looking for homes around 200,000.
That's right.
And in this price range is very unique, and sometimes difficult for some
It had
buyers.
its challenges to find the right place that was not going to be purchased by an investor or a cash only
Yes,
buyer.
because when you do rely on financing, you have to find a home that the financing will approve. So if you only have FHA financing, your options are much more limited. Fortunately, we used conventional in this case, so it did open up things quite a bit. But
I like the way you guys handled that when you met the selling broker at the house and developed a relationship with him, so that he accepted your offer, even though there were higher offers on the table.
well, that may be part of the story. You know, there's a lot of different things that go into getting an offer accepted. The main thing, though, here, so in this price range, you might. So, Perrin, when you first went out to look for a house, what was your initial expectation? What were you looking for?
Honestly, I didn't know what to expect
Okay.
at first, but as I saw a few houses, I began to get a good idea of what's available and what I can afford, and what would be a good option versus not so good. So over time, my expectations changed,
Yeah.
and at first I was not sure what I would be coming to expect.
I think what I noticed a good portion of the time in this price range, the buyers will go in there for the first time, and usually they're looking for a house that looks good in their head. Maybe it looks good in the pictures. They're picturing a house they can move into and be happy in. And don't think they realize until they start looking at the homes that the pictures often, they can be better than the actual home. I have seen this a lot in this price range, believe it or not. There are also some terrible pictures. You can't always judge by a picture.
You have to look at what you're going to do with the house.
Yeah, and so when you go in there and say it's an ugly picture, so you don't want to go to the house. But if you do, you see the carpet
really
might be really dirty. You might have some, cupboards that look a little bit old. But
all of that can be fixed. It's not, those are minor fixes compared with something major that might be wrong.
Yeah,
So
definitely.
You just have to look at what you could do with the house and how you will make it look.
And if you do that, you will actually get, in a sense, you'll get a lot more equity for your money because you buy a home that no one wants to buy. So the price is lower. It's really ugly. And you will get a really good price on it. So when you do updates on it later, you'll actually get your money's worth out of it. You'll get a lot more, and you'll have a house.
Instant equity.
Yeah. You'll do a lot better that way for actually very little work.
And I would imagine that the sale price would be disproportionately higher just based on having nice carpet, nice walls. Aesthetics could really make it add up a little bit.
Marketability is very important. Yes. Okay, and we will continue this conversation when we return.
Perrin Walker of Fairway Independent Mortgage Corporation provides national strength and hometown service for you when you purchase or refinance your dream home, investment property, or vacation home. Contact Perrin today at 253-226-6454 or apply online at perrin.walker@fairwaymc.com. Fairway, we serve people. Fairway Independent Mortgage Corporation, NMLS number 2289 is an equal housing lender. LO NMLS 226890. This is not an offer to enter into agreement. Not all customers will qualify.
Hey parents, it's hard to pick up your kids nowadays without embarrassing them.
Hi, honey.
Not in front of my friends.
Well, kiss the embarrassment goodbye with OMGPS. OMGPS is a state-of-the-art navigation system that tells you exactly how far away you need to park when you pick up your kids.
Keisha at mall. Proceed to outer food court.
But she's not at the food court. She's at the movie theater.
Exactly. OMGPS comes with patented preteen reasoning technology to pinpoint precise pickup locations and minimize embarrassment.
In 100 yards, turn off the oldies music.
Thanks, OMGPS.
OMGPS is not available in stores because it doesn't exist. But that's okay. You don't have to be perfect to be a perfect parent because kids in foster care don't need perfection. They need you. For more information on how you can adopt, go to adoptuskids.org. A public service announcement from the U.S. Department of Health and Human Services, Adopt Us Kids, and the Ad Council.
When is the best time to talk to your family about staying in touch during a disaster? When floodwaters reach your door? When wildfires are engulfing the edge of your neighborhood? Or an earthquake is destroying buildings? Or is the best time perhaps today? During a disaster, you may not be able to stay in touch with your family or friends as easily as you think. Go to ready.gov/communicate and make your emergency plan today. Don't wait. Communicate. Brought to you by FEMA and the Ad Council.
Welcome back to Lockin' It In with Deb and Per. We're talking with Perrin Walker, a recent first-time home buyer, about his experience buying a home, and we're getting ready to make an offer because you found the home that you want to buy. So, what goes into the offer? So, one of the things you consider, the first thing, of course, is the price that the seller is asking. And that you combine that with how long it's been on the market, different stages of repair for the home, if you need to do more work to it, if the price may already be discounted or not. You might want to do some comparables. You know, I'll go online. I probably don't have to do this. I already know what the comparables are. But you will price it compared to the other houses on the market that are about the same. And so basically I'll write up a Form 21, which we call a purchase and sale agreement. And do you remember that form, Perrin?
Yes, it was really easy to sign, too. It was a click of a button.
Oh, yeah. So anyway, the purchase and sale agreement includes all the details of the offer, such as the purchase price, the down payment amount, and the type of financing. Also, you might ask the seller for some concessions, such as it's common to ask the seller to pay the buyer's loan costs. And also, you might ask for some contingencies. First of all, you have the financing contingency because you need the money to buy the home. And if you can't get the money, you can't buy the home.
Right.
Yeah. And there's another important contingency, which is the home inspection contingency.
Yes, I think it was really important for me, knowing what to look at when I'm getting the house. The inspection does pull up problems with the house, and that's what it's supposed to do. So it's good to know if you're walking into something that might be serious, it might even be a tear down, or possibly just something minor that you could easily fix later.
Okay.
Even it's good to know those things, even if you don't use them against the in your reply to the seller.
Right. Now, this is important. So you don't want to have an inspection just to get a checklist of things that you want the seller to fix.
I mean, some of them you do, but maybe not everything.
You want to really look at it carefully and look at what you can live with, what you can fix over time. I think you want to look for any critical things first and get those off the table, and the rest, plan for the future.
And you don't want the seller to become less interested in the offer that you've done, because if you're asking too much, they're going to look for somebody else who's not asking so much.
That's true. Yeah. And it's really, buyers often, they just want the perfect house, even when they're buying a fixer.
But you're not going to have everything be perfect. Even new construction is not going to be perfect.
Yeah. Oh, yeah. Believe me, new construction is not perfect. I have seen so many horror stories with regard to new construction. It just doesn't, you think.
I wonder if they make it the same way they used to.
I don't think they do. The materials are not as good these days. Perrin's house, he's got siding on his house.
He
That's
has
as
an older
old as
siding.
the house. Yeah. Any siding he replaces it with will not last as long.
No.
Not even vinyl.
What year's your house, Perrin?
1910.
Yeah. So over 100 years old.
That's right.
And still strong. Those houses were built solid as a rock. They really are. Yeah. So for the inspection, now what did you ask the seller to do?
We wanted to make sure there wasn't a pest problem. There was a window that was kind of a hazard. We wanted to fix that. There were other things that came up in the inspection, but they were not big things or things that could break the deal.
Sure.
They were little things.
Well, there was one big thing. You have the electrical, which is functional.
No, it's completely fine.
But very old.
It's some of the wiring's a bit older.
Yeah.
But not where it really matters.
Yeah. And you're fine. You're using an air conditioner even in that old house with no trouble. Yes. So, yes. And we did some pest abatement. Got rid of a few little critters.
It was really nothing.
It was nothing. Yes. And so now let me explain what a typical offer might look like. So we have, let's say a home is listed for $330,000 and the buyer submits an offer, say for the full price with 3% down using perhaps a down payment assistance program.
Going conventional.
Yeah, well, yeah, ideally conventional. You'll get more choices in the homes, but
well,
I'm
with
not
3%, that's how you have to go.
Oh, right. Okay, I'm sorry. I wasn't thinking about that. I'm just thinking quickly here. So, and you might also ask the seller to pay a portion of the buyer's closing costs, maybe 3 or 4%. And which Perrin, I don't think we did that, did we?
No, I had some down payment assistance, which really does help. I really think it's a very good program through the State Financing Commission. It makes it a lot easier to get past the initial hurdles of first-time home buyership.
Yeah, so the Washington State Housing Finance Commission.
It covered your down payment and then like 1% of your closing cost towards sale price of your closing costs, correct?
It did. It was very useful. And there's expenses that come up when you purchase a home, and having the funds available for that was a very nice luxury.
Yeah.
Excellent.
Yeah, down payment assistance is really awesome, guys. You don't need 20% down to buy a home anymore. That's a fiction. So, okay. So, let's see. I put the offer together. Oh, and we do add one more thing. Okay, the offer, we also, remember, we have to put in there our contingencies, of course, and how much earnest money we'll be depositing. A typical amount is about 1% of the purchase price. And so now I package this together, and Perrin also adds, the buyer adds an introduction letter. So what did you put in that letter?
I wrote about why I want the house, why I'm the right person for the house. It really helps for the buyer to understand why my offer would be better than, say, a cash offer.
So it's not always about the offer amount,
It's a
the
personal
net
touch,
of the offer.
and you don't want to send an offer without that kind of personal touch, because it just does not feel the same from the other point of view.
Yes, you have to remember a home is something the owner has probably lived in for
A long time,
several years of their life, and they might have an emotional connection to that home. And if you have, if money is a concern, it may not matter. But if you have two offers that are relatively close, the buyer makes a huge difference as far as how the seller perceives them. Okay, and so we have that intro letter, and now I take all of that together, and I
with
put
the
it
pre-approval
into,
letter too.
Oh yes, and we include the pre-approval letter, and we package that up and put it into a digital signing, and then you get an email. And what happens with the email?
Signatures, it's really fast and easy.
You just click on a link.
Yes.
Yeah. And you can just click right down through and just digitally sign everything. You can print it if you like, whatever you need. And once all the buyers have put their signature on there, then I send it off to the seller, to their agent, and then
hopefully they sign
wait.
it. Hopefully they sign it and send it back
Well,
without any contingencies.
okay,
or
but
anything.
here, before we get there, we're waiting. And sometimes we don't have to wait very long. Sometimes it might only be a couple of hours. But sometimes it takes a little longer.
I think for me it was a day or two.
Yeah, it was a couple days.
Long day or
yeah.
two.
The seller's
And-
agent actually called and spoke with Deborah and me. Remember?
I don't know, but anyway, I don't remember that. I know that the agent, when the seller accepts, the agent will call me, and they'll call me before I see the signed paperwork, and they let me know they're considering the offer. Sometimes they might have a question about it. That's what you're talking about. He called
before
when he was considering the offer.
Before he submitted it to the seller.
Yeah, that's what he's thinking about. Yeah. So they want to nail down all the details of it and make sure everything is clear. And sometimes they might reject your offer outright, and then we'll hit the home trail again tomorrow. Other times the seller, they may come back with a counter offer and change one or more terms. They might, I don't know, want to raise the price to compensate for a concession you asked for, or, not replace the carpet that you wanted, or whatever it was. Or they could accept the offer as is, and most of the time I found they do, plus or minus little things like escrow agents, etc., which is just a realtor's preference usually. So you're waiting, and what are you thinking when you're waiting?
There's a lot of anxiety with the waiting. But
Yeah. The waiting is really hard. But at the other end of the transaction, the offer signed around and by all buyers and sellers, and we have a deal, and we'll talk about that more when we come back.
Perrin Walker of Fairway Independent Mortgage Corporation provides national strength and hometown service for you when you purchase or refinance your dream home, investment property, or vacation home. Contact Perrin today at 253-226-6454 or apply online at perrin.walker@fairwaymc.com. Fairway, we serve people. Fairway Independent Mortgage Corporation, NMLS number 2289, is an equal housing lender. LO NMLS 226890. This is not an offer to enter into agreement. Not all customers will qualify.
It only takes a minute to find out if you may have prediabetes, and you can do it at doihaveprediabetes.org. But you're probably not going to. Nope. I'm sure you've got a perfectly good excuse. Kids, work. I get it. You're busy. So what better time than now? Let's begin. Raise one finger if you're a man. Ladies, none yet. Oh, count in your head if you're driving. Now, 3 more fingers for everyone over 60, 2 over 50, 1 over 40, 1 more if you're not physically active, another finger if anyone in your family has type 2 diabetes, another if you've got high blood pressure. If you're overweight, raise another finger, 2 if you're very overweight, and 3 if you're really overweight. You've just taken the world's first audio prediabetes test. And if you're holding up 5 or more fingers, visit doihaveprediabetes.org or talk to your doctor. There's no excuse because prediabetes can be reversed.
Brought to you by the Ad Council and its pre-diabetes awareness partners.
The storks are bringing me a baby brother! We can do this together!
All right, let's go!
Storks know how to keep kids safe. Do you?
What?
Oh my gosh, you don't know.
I know.
You don't? Oh man, you laugh when you're uncomfortable.
No.
Making sure your child is in the right car seat is one of the steps to safer travel.
I will rock this!
You will rock this!
To know for sure that your child is in the right car seat for their age and size, visit safercar.gov/the right seat.
Cool. Very cool.
Brought to you by the National Highway Traffic Safety Administration and the Ad Council.
Welcome back. You've been listening to Lockin' It In with Deb and Per on Play 1180 AM. And we've been talking with Perrin Walker about his experience buying a home for the first time. And finally, we have a signed around offer. And that means all buyers and all sellers have signed it. And congratulations, you're officially under contract. So now, within one business day, you need to bring the earnest money in, and usually I prefer the buyer bring it directly to the escrow company, and they give you a receipt. And assuming you've asked for an inspection contingency, when you look at the listing again on MLS, it will show pending inspection. Yes. And all of your friends are going to be telling you, oh, isn't this a house you bought? No, it says it's still active. Are you sure you bought it? No. Yes. Redfin and Zillow will not be accurate. It will take a few days for those to catch up. And now the buyer has 5 business days to fill out their loan application. That's the full loan application. And that is step 3 of the 6 phases to getting a mortgage. And Perrin will talk about that next week.
Looking forward to it.
Yeah. And right now we have another exciting topic, and that is homeowners insurance. Yes, I know everybody loves insurance.
Especially when there's a disaster.
So we're talking with Libby Cruthers of Elliott Insurance Group, and she's going to help us understand some of the finer details of homeowners insurance. Welcome to the show, Libby.
Thanks.
Yeah, tell us a bit about yourself and what it is that you do.
So my family owns Elliott Insurance Group. We're an independent insurance agency, which means we represent lots of different carriers. We don't just write one type of policy. And that's really beneficial, especially in this market, because it makes sure that we can get you the right type of policy for your situation.
For the right price.
Well, I wish I could control the price. But really, I mean, if it's all things equal between 2 carriers, we would definitely recommend going with the better priced one.
Yeah. Okay. And so I'm a realtor, so of course, let's start with a seller. So you're going to sell your house, you've got homeowners insurance. What do you need to do when you're getting ready to list your home, or while your home is listed?
Yeah. So from an insurance perspective, we always say that we can only help you if we know what you're doing. So if you consult with a realtor, if you are looking towards what you're going to do next, if you've got the house on the market and you haven't told your insurance agent, we don't know if there's gaps in coverage or things that you need to be aware of. So every carrier is going to have a different take. There's specific verbiage in your policy about the home being vacant and that canceling some of your coverage or lowering some of your coverage. But each carrier has, well, I shouldn't say each, many carriers have different versions and interpretations of what vacant means. So if you're still living in the house while it's on the market, no problem, because you're still the homeowner. If you are in and out of the house, if you still have property in the house, that's where the definition gets a little bit blurry. So definitely contact your insurance agent when you're getting ready to put your house on the market, and they can tell you specifically what you need to do for your policy in your house.
Okay. Yes, because it's important to consider you have, especially if it's vacant, your home was vulnerable, and also there's a lot of strangers going through your house. Mm-hmm. Granted, realtors have had background checks, and so, we're not unsafe in your house.
Not sending people unattended.
Yeah. But, it's just the idea. You never know what kind of things, unexpected things can happen. And so if you're going to buy a home, at what point should they purchase the insurance?
So you can't purchase insurance for something that you don't own. So while you're under contract, you don't technically own the house, so you can't have insurance at that time. But your mortgage broker is going to require you to provide what's called a binder of insurance, which basically says that you have an intention to purchase insurance upon close. So you'll need to contact an insurance agent, tell them about the house, tell them about your assets and liabilities. What do you own collections-wise? Do you have any pets? Do you work from home? All of those kinds of things. They'll work up a quote for you. You'll either agree to take that or make changes. And once you confirm you want to take that policy, you tell your mortgage company that, and they go to the insurance agent to get that binder. Go ahead.
How much should you have that insurance for? The purchase price, the market value?
Oh, that's a really loaded question. So that's one of the things that people get really confused about with insurance is that there's so many values for a single property, right? So it's what it's on the market for. It's what it's going to sell for. It's what the county assessor has assessed your property at. In insurance, you are insuring the home for the cost to rebuild it. So there's lots of different coverages in your policy, and coverage A is the dwelling. So we do what's called a replacement cost calculator, and that is theoretically the cost it would be to rebuild your home in the event of a total loss. And that amount is probably going to be less than what you're purchasing the house for, because it doesn't factor in property, the acreage, where you're located, any of that type of stuff. So your mortgage company is probably going to want you to have enough insurance for the entire loan, but that dwelling coverage may not equal that amount. So there's some ways.
So what do you do in that case?
Yeah, so there's some ways you can get there. A lot of carriers will let you do what's called guaranteed replacement cost at
There you go.
percentage of that dwelling amount. So frequently you'll see 125%, 150%, excuse me. And that way you can get that value up while you're still accurately representing the cost to rebuild, but the insurance or the mortgage company is confident that you have enough coverage if you do have a loss.
Excellent.
Okay, so what about when I have stuff on a moving truck?
Ooh, that's a good question. So homeowners policies, again, we said have different types of coverage in them. One of those sections is for your personal property, and it covers your personal property away from your home. So that would be on a moving truck from location to location. Some policies will allow for coverage at different locations. So an X amount percentage of your personal property coverage at a storage location, or if your kid is moving away to college and lives in a dorm or an apartment, they have some of your personal property there with them. So on a truck, you should have coverage.
Oh, great. Now, how about all that cash I got stashed under my mattress?
Cash is also a concern for insurance companies because it's really hard to prove how much cash you had. So there you're going to have what's called internal limits.
Can you take a picture of it? Go to the bank and take a picture.
They're going to have what's called internal limits on the policy. And you'll see this in a lot of categories, but cash, coins, securities, bonds, things like that are included on there. So they will only pay up to a certain amount in the event of a theft or a loss for that internal limit.
A small amount, huh?
It depends on the policy. Again, I can't speak to all carriers or all types of policies. You can sometimes buy endorsements to increase that coverage, but just for the sake of giving you a number, it's usually
I've got
about
like
$2,000.
$3 million under my mattress.
Right where it belongs.
You believe me, don't you?
Your insurance company does.
Yeah, and it's in our $5 million house.
Uh-huh.
Yeah.
In Parkland.
So a lot of people also, they have things like guns and art.
Yeah, so those are some of the other internal limit categories. So because they've found that there are certain categories where there's a lot of claims, they put these internal limits in so that they're not maxing out your personal property total in each of these categories. So you have a couple of options. Number one is you can increase that internal limit. And number two is that you can schedule your property. So if you have, an engagement ring, something you've inherited from a family member, and those things are uniquely more expensive than the rest of your collection, you can schedule that. It's usually a pretty minimal price, but that way you know that that specific item is covered in the event of a loss.
So do you need to when you say schedule, do you need to identify every item individually?
Yes. So if you're going to schedule it, that item needs to be specifically identified. And depending on the value you're scheduling and how long ago you acquired it, they may require a sales receipt, an appraisal, something along those lines that would justify that value.
So back in the day, we would always take a picture and write down our serial numbers of all our electronic things and so on. Is that still...
So for not scheduled items, just your general property in your house, taking a video on your phone or taking a picture is a really easy way to document your asset. I remember years ago when I first started living on my own, we went through and wrote down the serial numbers of every electronic item in our house.
That's awful.
But they don't require that as much anymore because it's so easy to just do that video. You don't need to necessarily have that inventory. And it's a lot easier to keep current than it is to have that list in your safe deposit box away from the home that's secured in the event
plus
of a
you
fire.
can just open your drawer box and take a picture of the whole thing.
And if you're doing a video, you can narrate it. This is a pearl ring that I inherited from my grandma. She got it in Japan, blah, blah, blah. This is a pair of earrings I got for my 18th birthday. it's really easy to do that. It gives a lot of context.
I will do that with all my
So,
pearls and all my jewels.
I would recommend
Your pearls
if you
and
do
diamonds are
that, you probably don't want to upload that video online, because even if you put it in the cloud, if anyone accesses your account for some reason, they can see that video and they'll know all the valuables you have in your house.
I mean, you have secure storage the same way you would in person that you do online. I mean, obviously don't put it on your Instagram or your Facebook. You don't need to advertise what you have, but
I'd like to.
No, I was just thinking storing it on the cloud.
There is secure cloud storage available. I mean, you can have a safe place.
I'm a software engineer. I'm one of those skeptical people. Yeah, I know what can go wrong. Anyway, so I wouldn't want to put it online just because I would think somebody might know all the stuff I have now by accident. But that's probably another topic altogether. So something I often think about are things like Airbnb.
Mm-hmm. Homeowners insurance companies do not like it when you do Airbnb because it opens your house up for a lot more risk. So in a lot of cases, they'll require you to buy either an endorsement or additional coverage that would give you that commercial exposure, because now you have a business that's running out of your home, or you would have to buy an entirely separate policy for that commercial exposure. And people think that because they have insurance through Airbnb, that makes it okay, but that doesn't necessarily make your personal lines homeowners insurance company happy.
So do you need the Airbnb insurance or just your homeowners?
I believe Airbnb requires you to have insurance, like sign up for their insurance when you sign up, but your homeowner's insurance company is going to want to know about that, and they're going to want to tell you how they want you to act on it. And there is verbiage in your homeowner's policy that you are not using your personal dwelling for commercial usage. And so if you violate that term, it's possible they could deny a claim because you haven't disclosed to them what you're doing.
Do you see that a lot or not?
We haven't seen it. Airbnb is still new enough that we're not seeing the full exposures of that. The same thing with Uber and Lyft on your auto policies. Insurance companies are slow to adapt, and so they're trying really hard to figure out how to deal with the fact that we're confusing them. So we do have some clients who got it. We've written policies separate from their homeowners policies specific for that exposure in our cases.
Excellent.
Okay, great. In any case, I'm sure the industry is evolving so fast that these products are going to change quite frequently. Yeah. All right, so we'll be back and we'll continue our discussion on homeowners insurance with Libby Cruthers.
Perrin Walker Fairway Independent Mortgage Corporation provides national strength and hometown service for you when you purchase or refinance your dream home, investment property, or vacation home. Contact Perrin today at 253-226-6454 or apply online at perrin.walker@fairwaymc.com. Fairway, we serve people. Fairway Independent Mortgage Corporation, NMLS number 2289, is an equal housing lender. LO NMLS 226890. This is not an offer to enter into agreement. Not all customers will qualify.
I'm Ken Griffey Sr.
I'm Ken Griffey Jr., and we're proud to be men who speak up about advanced prostate cancer.
Not too long ago, we were a father and son team hitting back-to-back Major League home runs. Nothing could stop us until prostate cancer stopped me in my tracks.
1 in 7 men will be diagnosed with prostate cancer. Lucky for us, Dad caught his early.
It was difficult to speak up because of what was happening to me. 1 in 20 men will have advanced disease when first diagnosed.
Unfortunately, too many men live in a silent era because below-the-belt issues can be tough to talk about.
If you are living with prostate cancer and have symptoms like aches, fatigue, difficulty walking, sleeping, unexplained pain, or difficulty doing normal activities, don't stay silent. The most important thing is the support of your family.
If you or your loved one has prostate cancer, speak up. Visit menwhospeakup.com to learn more.
This was a public service announcement from Zero, the end of prostate cancer.
Right now, nearly 30% of U.S. students aren't finishing high school. In many places, it's even higher than that. And fixing it is a responsibility that we all share. This is President Obama, and I urge everyone to take responsibility for encouraging the high school students in your communities, to support them, challenge them, and do whatever it takes to help them make it through.
Do your part by going to boostup.org and giving a student the boost that's needed to make it to graduation. A message from the U.S. Army and the Ad Council.
Welcome back to Lockin' It In with Deb and Per. And we're talking about homeowners insurance with Libby Cruthers from Elliott Insurance Group. And we had just finished up with Airbnb. But, you know, there's something I always wondered about, and that is how does...
what do you do?
I get confused about what's auto and what's homeowners insurance. So, like if something is stolen out of my car.
Yeah. So this is actually a really sensitive subject for people when they have a claim, because you basically have two claims. If your car gets broken into and they damage the vehicle, that's a claim on your auto insurance policy. But if they steal things, that's going to be a homeowner's insurance claim, because it's your personal property, and that's covered as coverage C on your homeowner's policy. So a lot of things that we see stolen out of people's cars would be recreation equipment, golf clubs, sporting related things, electronics. You would be surprised how many people leave their iPads and laptops and cell phones in the car. And then like you see things like, how do I say this? Bicycles, things that are on top of the car, kayaks, things that are not attached to the car. But if it gets stolen off of there, that's your personal property.
That's a homeowner's claim, huh?
Mm-hmm.
Now, what if I have a bike and let's say it's not in my car, but let's say I ride it to the office, and this happened actually. I rode my bike to the office and I left the office and I have no bike.
Yep, that is personal property away from your home. And the same thing when you're traveling. If you have things stolen while you're traveling, that's still your personal property. That's still covered by your homeowner's insurance.
So if I'm in Asia?
Most carriers would be global. Again, if you're planning to travel, you can always check and see if you think that there's a concern. People do offer...
You can get traveler's insurance, too.
Yeah, but be very careful about what that actually covers, because that's such a broad term, and they might specifically only want to cover a portion of that. For example, your travel expenses, if your planes get canceled, property that you have with you, if you get injured. It's a very, very broad term. So look into what that really specifically is covering.
Okay. Now I got a question. What if you're sued for someone gets hurt or seriously hurt on your property or something, and you're liable? And what if it's for more than what your homeowner's policy covers?
Yeah, so I think there's a lot of things I'm going to unpack in that. Number one is coverage E is liability. So that is your personal liability on your premises and away from your premises. So if someone comes to visit you and they get hurt, and they sue you because it was your negligence that caused them to get hurt, your homeowner's insurance would respond to that. Most policies, this is auto, home, boat, anything that you insure, are going to have a maximum coverage you can purchase. Usually it's $300,000 or $500,000. And in our litigious society, it's very easy to exceed that amount of money in a lawsuit. So you can purchase what's called an umbrella policy. It sits on top of your other policies, and it increases your coverage to $1 million, $2 million, something along, the higher up than there. So if you had a claim, your homeowner's policy would respond, and then your umbrella would pick up the excess.
And is that only the liability?
Umbrella actually covers bodily injury, property damage, other kinds of legal damage. So that would be libel or slander. There's a variety of civil charges that might fall under that, like a violation of privacy type coverage. And then they also are going to cover your legal fees. So if you're sued by someone and it's not a valid lawsuit, you still have to hire an attorney. You still have to deal with those costs. Your homeowner's insurance would respond to that.
I was surprised at how affordable that is. How much is a typical $1 million policy?
You're asking me a question I'm very uncomfortable answering, because there's
think
so many factors that go
questions,
into it.
yeah.
Well, but this is a good thing to talk about, because Lots of factors go into insurance rating that we as your agents don't have visibility to, but they're looking at the likelihood that you have a claim. So they're going to look at your job, they're going to look at your hobbies, your pets, if you have a bad driving history, if you have a history of being sued. If you're an industry that is more susceptible to being sued, like if you're on a board of directors or something like that, it might be more expensive. I want to say a couple $100 just to give you a number, but it's going to be contingent on a lot of things.
But compared to the price
You're
of a
talking
homeowner's
about
policy,
yearly, right?
Yes, a couple $100 a year for your umbrella.
that's very affordable in my opinion. That's
when you
very
consider your
affordable.
assets and what you have to lose, absolutely.
Now, will that take care of things like, say, if you have a big wedding at your home and you've got some alcohol floating around, maybe a bit of weed, you know?
So, I always say, I mean, like we said before, talk to your insurance agent if you're doing something that seems a little out of the norm, because your homeowner's insurance policy may allow for some coverage, but there's something called a special events policy, and it's super affordable. Again, we're in the couple $100 range, and it's going to give you increased coverage, and it's going to encompass that specific event, and it wouldn't impact your homeowner's insurance in the long term if you did have a claim.
That's really good to know. I did not know that until we talked earlier this week.
Mm-hmm. And they're not widely known because a lot of people don't consider when they're having these events that they have these risks. It's my friends, it's my family. No one's gonna get hurt. But if they get hurt and they don't have money to pay for their injuries, they're gonna ask someone else to help.
Okay, what kinds of disasters are not covered by homeowners insurance, such as earthquake and flood, or anything else?
Earthquake and flood. A couple of years ago during the Oso landslides, it also came out that earth movement landslides are not covered as well. So in your policy, you'll see that you either have specified perils that are covered, usually fire, wind damage, things like that, or else you might have a special policy, and that's special causes of loss, in which case they just take things out later in the policy. Earthquake and flood are always excluded from your standard homeowner's policy. You can buy back that coverage. In some cases, they'll allow you to put an earthquake endorsement on it, or you can purchase a flood insurance policy through the National Flood Insurance Program or from a surplus lines carrier.
How does flood insurance work then?
So the definition of a flood by insurance terms is the sudden or unexpected inundation of more than 1 foot of water, it might be 1 inch, in one or more property or one or more acre. So if you live in a rural area, you have a lot of property, and there's a flood that comes up to 3 acres of your land, that would be considered a flood if your home is damaged. If you live in an urban area and one of your neighbors has an above-ground pool and it's a slight incline and that pool fails and water rushes through your house and your neighbor's house, that's a flood.
So, but it has to be an acre?
It's either one or more property or one or more acre.
Oh, okay.
Mm-hmm. Yeah. So they're trying to cater to people in urban and suburban areas.
Okay. So, I don't know, do you have any stories from the field that might be a representative case study for people?
I think that the liability component is the thing that people misunderstand the most. They understand that it's covering your house and your property, but the liability is really where a lot of claims come in outside of theft. So, for example, if you have a UPS person delivering a package to your home in the winter and it's not well lit and you have a little bit of sidewalk
and
that's
he
raised, slips and falls and dislocates his shoulder, that's a homeowner's claim. So,
and you didn't even know he was there, and you may not have even known the package was coming.
Right, and we've actually seen this specific claim. And so he reported it immediately to his employer, and it was through UPS.
It's not L&I?
So it went through L&I, but then L&I subrogated back to the homeowner. And
they're always going to do that.
They go back to try and get their money from someone else who's at fault. So they paid up front, but then they wanted it back. And so in this case, it was a year after the injury. They truly had no idea that someone had gotten hurt on their property. But that's a liability claim that their homeowner's insurance covered.
Good thing they had homeowners insurance.
And yeah,
and also that guy didn't have a super litigious lawyer who wanted to way oversue, because
$5 million
that happens all the time.
Mm-hmm.
You get just.
And another example of a liability claim is a teenager was on a sports team, and the dad thought that this coach was not a great coach, and so he made some judgment statements, and he made some statements online and was sued for personal injury because he felt that his reputation was so damaged by what this person said about it. That was unintentional. He wasn't trying to say things that were invalid or anything, but he damaged this person, and that would be a homeowner's insurance claim as well.
Even though Facebook is it's an environment where you're only exposed to people that are your friends. So it's like saying it in private, isn't it?
No.
No?
No, nothing on the internet's private.
Now the
on Facebook, I don't
now
know.
the homeowners insurance company would defend you with their lawyers. Is that what you're saying?
So the your homeowner's insurance would defend them for the fact that he was being sued for his actions. And again, I can't speak to every policy or how it's all written, whether you hire the agent and then they reimburse that, or the lawyer and then they reimburse them, or if they designate you a lawyer. It's going to depend on a lot of factors. But your homeowner's insurance responds to the cost of defense as well as the lawsuit itself.
Wow. I bet a lot of people did not know that.
I would bet that too.
Yeah. Now, so what about your credit score?
Credit is also a sensitive subject in insurance because people don't think that their credit has anything to do with their home. There's a lot of factors that insurance companies use to determine what your rate is, and they do what's called an insurance score check. It's a soft pull. If you look on your credit report, it's a separate section. So it shows that people have done a soft pull on you, and that's how an insurance carrier is verifying that you're a real person. And it factors in timeliness of paying bills and things like that when they come up.
But those things do not affect your credit score, correct?
Your insurance claims?
The soft pull.
Correct. Yeah.
All right. Thank you very much, Libby. You have shared so much wonderful information with us. And please tune in next week for another exciting adventure of Locking It In with Deb and Perrin.